Supersize your business. Sharon Horne-Ellstrom here. Today, let's talk about building a resilient real estate investing business to supersize and grow your business. We're going to talk about strategies and factors that are important in no matter what industry we're in. I've been involved in the real estate industry, I think, probably for 4 decades now, real estate investing as well as other forms of real estate, because it's one of those foundational, really powerful industries to be involved in, because it's a way to learn and grow and figure things out that we might not otherwise figure out. Building a resilient real estate business, we need to consider at least 4 different factors. And then we want to set up strategies and put systems in place to make sure that we're considering and doing these things no matter what business we're in. I'll share a couple of examples. For example, we want to master market dynamics. We need to know what is going on in our market, in our industry. We want to look at, specifically for real estate, economic indicators have an impact on real estate. Interest rates, of course, have an impact on real estate. Availability of funds and lending has an impact on the real estate, especially the investment industry, as well as housing trends. So for real estate investing, those are 3 key performance indicators and key economic factors we want to keep an eye on to determine what we're going to do with respect to our business, growing, building, supersizing our business, and in different type of investments we're going to do. Another thing that's really important in real estate investing is diversification. A lot of people like to pick one area of real estate investing to start in, but they pretty quickly expand out into other areas. My experience has been, we originally started doing short sales in our business because that's what was necessary at the economic times and conditions. But as the economy changed and the world changed, short sales became an unnecessary tool. So it would be very rare for me to do a short sale nowadays with respect to real estate investing. But fix and flips, rehabs, rental property, multi-units, asset class like that is a way to diversify our portfolio. We can also use geographic diversification. I've had properties all over the country because I know that sometimes some markets are going up and other markets are going down. Even in times when a lot of markets are crashing, there's always some markets that are continuing to increase and accelerate. So we want to have geographic diversification as well as asset type diversification. And by asset type, residential property, commercial property, land, tax deeds, things like that. There's all different kinds of investments that we can do based on the different economic conditions. And the more we diversify, the more we spread out our risk of our investments. And then there's different investment strategies, which is more like the fix and flip, rehab, short sales, things like that. Also, in real estate investing, we want to build a strong financial foundation. We want to have access to capital. One of the early lessons I learned from Robert Allen was no money down real estate investing. You don't have to use your own money, but you have to be resourceful and you have to have access to money. The money has to exchange hands for real estate to exchange hands, but it doesn't have to be your personal money that you've saved up. A lot of people think that it has to be, and they wait and wait and wait till they get a down payment before they buy their first property or their first house. But usually, if we're just creative, there are ways to find the resources to do the things that we want to do, assuming that the property cash flows and all the other things are in place. We want to have liquidity management. We want to have some liquid cash flow assets. One of the things that kills our businesses faster than anything isn't profitability, it's actual cash flow, having the money flowing that we need to keep the machine of our business running. And then we want to have debt management. We want to make sure that we are using the right kind of debt, not using a bunch of hard money loans and things to invest in our real estate unless we have an exit strategy that makes that a viable strategy. We want to emphasize sustainable growth, meaning we want to pay attention to the things that will help our business last for the long run and grow. Things like financial viability. Is the business plan we're following financially viable, or is it just a short-term kick that we might be looking into? And do we want to base our whole business and our whole livelihood on a tactic, or do we want to base it on fundamentals and things that have been proven to work time and time again? We want to take into account environmental considerations, a lot of green building and things. There's businesses springing up all around green technology now and green certification for buildings, etc. And then we want to be socially responsible. Are we doing something in the community that makes the community a better place? Are we involved in our communities? Are we doing what's right, even if sometimes it's hard? We also want to do strategic planning for long-term success. Well, what are some of the factors to consider there? Setting clear, achievable goals. SMART goals, we talk about that a lot. And we do that in my businesses. I hope that you do that in yours. Have some kind of I say you got to have a goal setting, decision making processes system to make sure that you're documenting what you're doing and continuously improving on it. We want to develop a comprehensive business plan. I am not an avid believer. I believe in planning, not necessarily a business plan unless you're using it for financial resources. We want to implement effective risk management strategies, meaning we understand what the market risks are in the different markets that we're in. We understand operational risk and we understand financial risk, and we're putting things in place to mitigate those type risks. Things like insurance, right? We all have insurance. We all have backup financial resources in case something unforeseen happens. We want to adapt to market changes. We got to be paying attention to what's going on in the world around us in market changes. Some industries more so than others, but most of our industries, we need to keep an eye on the pulse of what's going on. We want to stay informed. We want to be agile and flexible and continually improve. We want to invest in innovation, things that are available, leading edge technologies or businesses or practices or systems that can help us be more efficient and effective. We want to also build a strong team. Whatever business you're building, chances are you're not going to do it all on your own. We at least need customers, but in addition to that, we need vendors and suppliers and team members and people that can help us grow and build and supersize our business. That doesn't happen in a vacuum. And so we want to make sure that we're hiring and retaining and training and taking care of the key people that we're bringing into our organization. We want to build relationships with key stakeholders in our business, inside and outside of our business, so that we, number one, keep aware of what's going on in the industry, but number two, so that we have a heads up and know what direction we want to go on when it comes to building a strong team. We also want to foster a culture of creativity and collaboration and working together where people matter, right? People stay where they feel like they matter and are making a difference and are treated well. More people leave, at least in my experience, over not feeling valued or not being appreciated or having a bad boss. I think having a bad boss is probably the number one reason people leave any organization. But not feeling valued and not feeling appreciated and not feeling like they're growing or what they do matters or not understanding where they fit in the organization are probably the biggest reasons people leave. All right. That's all I've got today. Curious, are you building a resilient business, whatever industry you're in? Do you have a resilient real estate investing business? Share in the comments below so we can learn from one another. And I will, of course, be with you tomorrow with another interesting strategy that we can use to build and grow and supersize our business, no matter what business we're in. Have a great day.